Hello everyone. The four most dangerous words which are used in the world of investing are, this time it's different. Ever since India liberalized in the early 1990s, we have heard these words around the Asian financial crisis of 97-98. We heard the same four words during the raging bull market of 2003 to 2007. We again heard that this time it's different during the global financial crisis of 2008 and 2009. And we again hear these words during the current crisis of Covid-19. So what are our views on Covid-19? Well, as you're all aware, that the world at large, including India, has started to open up in a gradual manner. The world at large has also started to flatten out in some ways or the other in terms of new infection rates. We expect the same in India could be achieved somewhere around July end or maybe mid-August. We have to learn to live with the Covid-19. There are many companies around the world which are engaged in trials to come out with a vaccine. However, we believe that a vaccine is still some time away. The response. We have seen unprecedented response from governments and central banks across the world. The same has been the case in India as well. We have seen the government come out with around 20 lakh crores of stimulus measures. Amongst the measures, two measures in our opinion were quite notable. The one to do with the MSME credit, where they are enhancing credit by about 20% to the whole MSME sector, is a quite notable one. Bear in mind, the MSME sector is a sector which has liquidity issues. But a liquidity issue, when persisted for long, becomes an insolvency issue. So that's a great step in our opinion. Apart from this, another step that we really liked was the dismantling of the APMC. This could have far-reaching effects on the Indian agricultural economy. The impact. Well, the impact on the economy is that in FY21, we expect the Indian GDP to contract anywhere between 2% to 7%. The impact on the earnings of the markets are likely to be severe as well, where we expect FY21 to be a year where it degrows in earnings. In FY22, the Nifty EPS estimates are anywhere between 525 to 600 rupees of EPS. Obviously, they are varying quite a lot. We believe that the market lows which we saw in March are likely to be broken only if we see a strong second wave of infections either in India or across the world. If that were to happen, markets may see another leg downside. However, if that were not to happen, we see 2 or 3 strong themes emerging in the markets. One of them will be a change or a shift in supply chain from China to some of the other countries. We had already seen this shift playing out before the COVID issue hit us. It started with the trade war, but now with the COVID issue, we see a lot of companies trying to shift their supply chain bases out of China. If not out of China, they'll be looking at alternatives along with China. India has a big chance to grab a share of that opportunity. Another theme which we believe will be a big theme going forward is the shift from unorganized to organized. This theme started during Demon, got accentuated during GST, and now we believe with the COVID issue, the big will get even bigger. The ones with balance sheet, the ones with good liquidity on the balance sheets will be the ones which will become even bigger. In the end, we would advise our investors to be patient. Well, one of the other sayings in the markets is that a stock market is a device to transfer wealth from the impatient to the patient. Well, all through cycles, all through booms and busts, people who have remained patient have made loads of money. Happy investing.